Good morning and welcome back to the latest edition of the InvestTalk market analysis for the week ending October 18th, 2024. I'm host of InvestTalk, Justin Klein. I thank you for tuning in, liking, and subscribing to this channel, as well as our podcast, InvestTalk. Now, this week I'm going to title the video, Gold Prices Surge as Market Prices in a Trump Victory. So let's talk about that. Let's dig into the details here. This is the past week. Okay. Obviously, a very green week overall. Google, Microsoft, barely positive. Amazon and Tesla as well, not having the best week. But Apple, Nvidia, those had a nice week. You had some weakness out of energy, but the rest of the market did pretty well. Finance did well. Let's see that here. If you look at the consumer services sector and the commercial services, right? Visa, MasterCard, et cetera. Utilities did well. Retail did fairly well. You had industrials do pretty well. Process industrials, transportations, all the industrial sector, you see that pretty green, except for Uber and a couple of the other bigger tech ones. But overall, it was a nice positive green week, and I'll get into the details here in a bit. But I want to show the economic data as well as the odds for the presidential election. Now, not a heavy week for economic numbers. You had the business leader survey that ticked down a little bit for the New York Fed. Industrial production, that was negative 0.65 year over year. But remember, this is pre-COVID, and this is negative 2% going into COVID. So, you know, being around the flat line, frankly, is not that bad, shall we say, compared to history, because you do get periods where industrial production, stays negative. This goes all the way back to the 20s, but that's where we're at on that front. Continuous claims for unemployment that did tick up once again for the second week in a row, up from 1.82 million in the third week of September. Now we are at 1.87 million, so near the highs of the year. So that gives a little bit more credence for the Fed to cut rates. Housing starts, that ticked down a little bit, but we're still kind of hanging around these low levels, about 1.3-ish, 1.4 million housing starts. So frankly, not a lot of news either way, positive or negative. And this is the Fed odds for the month of, for this month, for November. November 7th will be when they meet again, and there's a basically 100% chance they will cut 25 basis points. Very minuscule chance it'll be higher than that. And then in December, the market is pricing in another 25 basis points. Okay. But a decent chance that they'll pause as well. And if, I could see a pause if the economic data continues to come in fine. If the jobs numbers come in relatively strong, if the markets continue to surge to all-time highs, do they really need to cut in December? We shall see. But if you go all the way back out to December, or all the way to December of next year, you're looking at a 325 to 350. Right. That's about 150 basis point cuts between now and the end of next year. So you're talking about 50 this year, and then another 100 basis points next year. Okay, so that's what the market is pricing in. Now, things obviously can change, and this is the current odds at poly markets. Now, this is not perfect by any means, but you have a 60-40 race here based on poly market. If you go over to predicted, that's more like 55. There's a vig here that predicted would take. So you probably have to trim a few points from each, but basically you go into the election in just a couple of weeks, and it is a Trump favorite. Let's just say that. Now I still think anything can happen. I think both candidates are not very well liked, so a lot of it will depend on who shows up at the polls and who gets their vote in, right? And so that's kind of the big variable, I think, at this point. So we shall see, but the market is certainly pricing in a Trump victory, and we'll get into that right now. Let me go to a couple of charts here. Here is the NYSE. That continues to power to 52-week high. The S&P, also a new high, but not as powerful because this is the NASDAQ, right? NASDAQ not a new high. So that's notable, right? You have to wake up and take notice of that, because that that could be a I don't say a warning sign, but it could be a harbinger of things to come, right? Relative weakness out of tech, that's what you're getting right now. So if the broader market, gets weak at some point, is tech going to lead you lower? And this is the growth to value trade here. And this is just a bear flag, right? I can zoom out, and we know that this topped, right? The growth trade topped in late 2021, huge downdraft in 2022 when the Nasdaq was down 33%, and then you got a nice bounce back and the real surge into this summer on the AI trade, and that had a big reversal. Late summer, and we've had a little bit of bounce into the fall here, but this is what I call a bear flag, where you get that strong move in one direction, and you get kind of a consolidation, a counter trend rally, but this is all just a trading range in order to likely move lower. So, and the fact that the Nasdaq is underperforming, these other sectors, or other parts of the market, over the past few months is a telltale sign here of, I think, that the growth side peaking out. Now, Nvidia remains strong, but we're back to those all-time highs. But look at the MACD here, right? Not making new highs. If I zoom out to a weekly chart, okay, this is not making new highs. See this MACD here? It's not following through to the upside. And if I zoom out to all these other, big tech names, clean this chart up here. This is Amazon, right? MACD divergence, okay? If you look at Microsoft, okay, same thing, right? The MACD's rolled over. It's not making new highs. This is consolidating right at that 50-week moving average to likely move lower. And then I can go straight to like the SMH, right? This is the semiconductor ETF. Big move down, kind of trend rally, MACD clearly weak. Now we're not below the zero line, so anything could happen. This could just turn into a long consolidation period before you move higher, right? Because the broader move is still up and it's still bullish. So this could turn into just a consolidation, but you do have a potential head and shoulders here to watch out for. So, long term still bullish, and you still have to call spade a spade. But near term, it's starting to get bearish, and you have this head and shoulder setup here, right? Right, left shoulder, head, right shoulder, and if this triggers, obviously that could be major downdraft in semiconductors. And remember, semiconductors are very cyclical. They go through periods of tons of earnings and then tons of losses because of overcapacity. And you look at a company like ASML, right? This is one of the largest chip equipment manufacturers in the world, and they warned going forward. So what that says is, maybe the chip producers are seeing a bit of overcapacity, that they're not getting the orders that they want, and they are being cautious. Let's just say that. So that is something to watch out for and could be the catalyst for, a big move lower. Okay. You can look at AMD as well. Here's AMD, right? This is even more of a bearish pattern, right? Where you have that move higher, and now this is in a downtrend. MACD is below the zero line. So this is threatening just really a downtrend, not just a break of that high. So that's kind of where we're at in the semiconductor space. Let me get to the Trump trade, though. As I was talking about before, look at industrials just powering to new highs here, and consolidating. Everything's bullish about that in the near term. Utilities as well had a little bit of a pullback, but once again, powering to new highs. And then financials moving up to new highs as well. And you look at the Morgan Stanleys of the world, right? Goldman Sachs's of the world. Those are just doing pretty well. And you look at some of the large commercial banks. Here's J.P. Morgan continuing to do well. Wells Fargo, that one powering to new highs as well. Bank of America, and that's not quite there. And Bank of America is one of the poorer ones within the space, but overall, it's really once again, this Trump trade is full on, and the gold prices, as I said in the title of the video, those are at new highs, as well, just power. And that's just and there's a few reasons for this. Uh, it's federal largesse, and the thinking, I think, in markets is Trump will be stimulative for the broader economy because he will run a much larger deficit, cutting taxes as well as spending money to reindustrialize the country. And that will certainly help a lot of transportation, industrials, utilities, transportation, IYT. So there's just a lot that the market is pricing in here. I still think it could go either way, so you don't want to get too bought into either direction. But that's what the market is starting to price in. Could it be a buy the rumor, sell the news type of event as well? Does he hit harder in antitrust? The Biden administration has, hit companies like Live Nation, and that's powering to new highs. And maybe, you know, this is telling you maybe Trump won't be as hard on antitrust, right? With Live Nation doing so well. Same with Visa, right? Visa was hit with a lawsuit from the DOJ as well, and antitrust. And so, uh, those companies are surging. It shows Trump will likely be less harsh on those big companies. So that's where the market is. It's what the market is pricing in at the moment. You even have Bitcoin, right, surging. Looks like it's tempting to break out here, to be frank with you. If I head over to Coin Market Cap, it's usually where I go to see where Bitcoin prices are, right? 68,000. And it's threatening a breakout. Like I said, if I zoom out to a 1-year chart, this is just all bullish consolidation, if I'm being frank. I'm not the hugest crypto fan, but Bitcoin is clearly gained adoption and could certainly break out. And you have to call a spade, whether you like an asset or not. It doesn't matter. This certainly has a bullish look to it. Now, could the consolidation uh, continue for some time? Sure, absolutely. But obviously, Trump has spoken good things to the crypto space, and some sort of deregulation or regulation that would help the space gain more adoption. I think is more likely under Trump, and so that's getting a bit of a rally as well. What else do I want to get to? Let's go to the move index, because I think this is important as well, because if the treasury market is not functioning, if the Fed can't, or sorry, the treasury can't finance itself, then that will be an issue. So this is the volatility of the treasury market, of the bond market, and this is now in an uptrend. Okay, an uptrend is defined by higher highs and higher lows. What do you have here? 1, 2 higher lows, and now 2 higher highs. This is an uptrend. And once again, is this pricing in a Trump victory that is going to be rough for the deficit? I think that's what it's saying. That's what gold prices are saying. That's what Bitcoin prices are saying. It's what the industrial sector is saying. That Trump will be broadly inflationary. Okay, and I think that's what you basically have to call it. And so the dollar has rallied, but it did weaken. It did weaken a bit as we close the week, and it's something that you have to pay attention to. That this is likely a breakout for inflation next year if Trump wins. Um, and despite his rhetoric, you have to follow what the market is telling you. And the market is telling you that Trump is broadly inflationary, and it could be good inflation. It could be bad inflation, right? It just depends on kind of how it goes, what the policies are. I think there's still a lot to be considered here, especially when you're thinking about who wins the Senate, the House, and how much control a Trump presidency would have. Um, Now, a lot of people thought you were going to get a red wave in 2022, and that didn't really materialize, right? Now, Trump wasn't on the ballot. There's a lot of big Trump fans that will go to the polls because he is on the ballot. And so that likely will filter down. That's different than 2022, right? So I still think a lot to a lot still to be seen. But overall, near term, you have to be bullish on risk assets as we head into the election. Now, things can change. I think you still get bullishness through probably at least mid January, could be all the way through the first quarter, and then it's kind of TBD depending on what liquidity looks like with the Treasury, with the debt ceiling, right, fight coming up, who's in power, and what type of policies can they push through. Still a lot to unpack, but that's what the market is pricing in, right? And that's why gold prices are at all-time highs, and that's why, and that's what you're seeing in the betting markets, that Trump is the favorite as we head into the election in a couple weeks. Well, that about does it. Appreciate you all tuning in. Hope you have a wonderful weekend. A reminder that the content of this video for educational purposes only and should not be considered as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a wonderful weekend.